Well, good afternoon, everyone. Welcome to Sales Tax Basics. I'm Cindy Nellis, and I'm the director here at Penn West Clarion Small Business Development Center, and we are happy that you have decided to join us today. As many of you know, as many of you are getting your businesses set up and ready to go, we want to make sure that you have the basic knowledge of Pennsylvania sales tax. Your questions may be, who needs to be registered to collect? What items are taxable? When does sales tax need to be charged? Where do you file and pay? And what should I do to keep proper records? So today we will answer all these questions and more, as well as learn about sales tax exemptions, use tax, and resources to help you every step of the way as your business grows. We have the pleasure of having a team of representatives from the Department of Revenue. So we are glad you are here, and I'm sure that you will be keeping them busy today. The Pennsylvania Small Business Development Center established a partnership with the Pennsylvania Department of Revenue to deliver a monthly webinar series that provides key information for you, our business owners. We have 4 different webinars, each one offered every 4 months. And today we'll focus on sales tax basics. Our other webinars during this series begins with getting started with My Path, Pennsylvania taxes for new businesses. And then our next one, which will be next month and will be on April 12th, is withholding basics. You'll receive this flyer that you see, and we hope that you plan to attend upcoming webinars. A few reminders before we start. As I noted in the chat, is that following today's webinar, you'll receive the PowerPoint presentation, a link to the recording of today's webinar, the tax series flyer, and then, of course, a registration link to all the other webinars throughout 2024. So that we can address your questions quickly. If you have a question for our presenters, we ask that you put them in the Q&A. And if you have a question for me, your host, please enter that in the chat box. I'd like to start today by just giving you a quick introduction about the Small Business Development Center. We are a grant-funded program with a mission to help businesses start, grow, and succeed. We provide education, information, and tools to help you, our business owners, make better business decisions. We do this through our one-on-one business consulting services and training like today. Our consulting services are provided at no cost and they're confidential. We offer training seminars on a variety of topics that target the needs of small businesses. The Small Business Development Center, we're here for any small business, which is generally defined as any business with less than 500 employees. We use our funding to give businesses access to database information that we purchase for you to use, and resources related to conducting industry and market research, implementing marketing strategies, and financial analysis. In Pennsylvania, the Small Business Development Center network includes 15 centers, all located at institutions of higher education. We're also a part of the America's Small Business Development Center, which is a national network that enables individuals and businesses all over the country to access our program services in their neighborhood. We encourage you to become a client of the Small Business Development Center to help you answer questions, access many of the resources that we have beyond what we've mentioned today, and to find solutions to challenges you face with your business. We hope that today you'll get answers to the questions that you have. As I mentioned, we have a team of experts with us, and leading the team today is Stephanie Schreck. She's a research analyst with the Customer Outreach Relations and Engagement Division with the Pennsylvania Department of Agriculture. And Pennsylvania Department of Revenue, sorry. I had the agriculture in my brain from half an hour ago. Before we get started, I did slip by one slide, and this is just how you connect with the Small Business Development Center. As I mentioned, you will get this slide presentation, and you'll get these links to us. And this has my email address. So of course, if after today you have specific questions and you directly want to reach out to me, that's always an option. You can do that as well. Okay, Stephanie, I'm going to pass it off to you, and I'm going to stop sharing my screen so you can share yours. It looks great, Stephanie. But I can't hear you. I think you're on mute, Stephanie. There you go.
Thanks. Hello all, and welcome to the new business series presented by the Pennsylvania Department of Revenue. My name is Stephanie Schreck, and I am a research analyst with the core division of the Customer Experience Center. First off, I just want to start by thanking you for joining us today and for all wanting to learn more about how to properly collect and remit Pennsylvania sales tax. One thing we do want to emphasize in our presentation series, the cost of non-compliance far outweighs the cost of compliance. So just give me 1 second. And I just lost my screen. 1 moment. Okay, can everyone still see my screen okay?
We are seeing your presentation slides. Yeah, just
Okay.
yeah, you need to switch the view.
All right, I thought I switched that back. I apologize for
go.
that. Okay. All right, so today we are going to cover a wide range of information relating to sales tax and the nuances that go into it. We will be defining what exactly is sales tax according to the Commonwealth of Pennsylvania and how local sales tax is applied. With that, we will talk about what items are taxable, including tangible personal property, services to tangible personal property, and enumerated services. We will also clarify who must collect Pennsylvania sales tax, as well as what qualifies as nexus. We will also go over how to register for a license, how to calculate the amount of sales tax to collect, as well as how to report and pay to the Commonwealth. Next, we will quickly go over exemptions and who or what they apply to. We are also going to highlight use tax and when it needs to be paid. And finally, we will wrap up this module by going over what resources are available to help you should you have any questions or need further assistance. So what is sales tax? Sales tax is a 6% tax on the sale within the Commonwealth of tangible personal property, services to tangible personal property, and certain enumerated services. We will talk about each of these points individually, but before we do, let's explain by what we mean by a sale within this Commonwealth. If you buy an item at retail and the item is delivered to, used, or consumed in Pennsylvania, then the sale occurred in this Commonwealth. If a business sells and delivers an item to an out-of-state location, then the sale was not made in Pennsylvania and is not subject to Pennsylvania sales tax. As you can see on the map, Allegheny County shows 7% and Philadelphia shows 8%. This is because of a local sales tax. During the 90s, the Pennsylvania legislators passed a new law imposing a local sales and use tax on certain counties. This was imposed in addition to the state sales tax in Allegheny and the city of Philadelphia. The rate in Allegheny County is 1% and Philadelphia is 2%. These taxes are deposited into a fund dedicated to pay for specific needs of those jurisdictions. The rules are the same, except the local tax is based on the place of sale, not delivery. For instance, if I buy a meal in Philadelphia, I will be charged a total of 8% sales and local sales tax on the meal. If I live in Montgomery County and order furniture from a Philadelphia store, The additional 2% local sales tax will still be added based on the location of the store where I made my purchase. So now that you're a little more familiar with what exactly sales tax is, let's review the individual taxable components. Tangible typically means something material or physical. So tangible personal property is generally physical property that can be touched, such as furniture, clothing, vehicles. However, there are items that cannot be felt but are still considered tangible property, such as electronically delivered software. It's distinct from real properties or real estate in that it can be moved from one location to another, while real property is permanently attached to a single location. These are some of the taxable items listed in the law. Some of these are clearly tangible, such as greeting cards, helmets, and books, while some, like telecommunications, are a bit less black and white. There are also examples here on the screen that are not specifically in the law, but they help to illustrate what kind of items constitute tangible personal property. And you can see how wide-ranging these items are. If you buy any of these or similar items in Pennsylvania or have them delivered into Pennsylvania, they are taxable tangible personal property. We do have a more complete listing available in our REV 717 guide. With the passage of Act 84 in 2016, certain digital products are now included in the definition of tangible personal property. These products include videos, photographs, books, any otherwise taxable printed matters, applications, games, music, any other audio. This includes satellite radio, canned software, including support, and any otherwise taxable tangible personal property. These items purchased and or used in Pennsylvania are taxable whether electronically or digitally delivered, streamed or accessed, or whether purchased individually or through subscription. This also includes any maintenance or updates. There are certain items of which sales tax is excluded per the sales tax law. The exclusions include the following: wrapping materials that are needed to deliver property, such as bubble wrap, pallets used to transport goods, shrink wrap, and so on. Anything wrapped with the package or used to deliver the package is considered exempt. Grocery store food, unless it is considered ready-to-eat food, such as sandwiches from a deli. Clothing that is considered everyday wear. Everyday wear items are articles of clothing that are not required as a condition of your employment, such as a uniform, and considered to be your regular clothes. These everyday wear items are not subject to tax. Caskets at the funeral that the funeral director uses in conjunction with the funeral service are exempt from both sales and use tax. Regular unflavored water, including mineral waters, are also exempt. And then we have sales for resale. This is a big one for many businesses. Industries like department stores, grocery stores, automobile dealers, etc., are in the business of buying goods and reselling the same goods. In Pennsylvania, if the inventory or goods that you are buying is for resale, you are not required to pay sales tax, given that you will charge the tax to the end consumer. Sales tax is also imposed on services done to tangible personal property. Basically, the rule is if the item that needs serviced is taxable, then that service itself is also taxable. For example, if my watch breaks, I take it to a jeweler to have it repaired. That transaction is subject to sales tax. Since watches are subject to sales tax, aka taxable, then the repair service needed to fix my watch is also subject to sales tax. This slide shows some other examples of services that are taxable, which may help you better understand this concept. Take a note of the first item, wrapping or packaging tangible personal property. Now, I know I just used wrapping materials as an example for an exempt item. This is considered taxable because they are not mentioning it being used specifically by the seller to wrap or package items incidental to delivery. So the example on this slide is referring to the service of wrapping tangible personal property, such as gift wrapping. Enumerated services are those services specifically taxed. These are not tied to tangible personal property, but are specifically identified for taxation by legislation. These can get very involved, and some have special rules on how to determine taxability. All of these items are specifically outlined in the REV 717 that I mentioned earlier. So we recommend that you check this out if you are providing any of these services. All right, so now you know what sales tax is, some examples of items and services where sales tax is applicable. Let's dive into who should be collecting sales tax. The Tax Reform Code states every person who maintains a place of business in the Commonwealth to sell tangible personal property or to perform taxable services is required to be licensed for and to collect sales tax from its customers. In other words, the law requires Pennsylvania businesses to collect the tax from the customer at the time of the sale. What it means to maintain a place of business has changed over the last several years. For an entity to have physical presence, it means exactly that. To fall under this category, a business must have taxable sales and has some type of physical location, like an office, a place of business, could be an employee, and this does include representatives or independent contractors. They would store inventory, rent or lease properties, tangible goods, or they make deliveries to a Pennsylvania address. Meeting the qualifiers for physical presence means the business would be maintaining a place of business in this Commonwealth. This is going to apply to most of you. For the majority of you attending today, you will have a physical presence in Pennsylvania. Let's quickly revisit this bullet point number 3, goods and inventory in a warehouse. Under Pennsylvania law, inventory stored in a warehouse, fulfillment center, or any other location within Pennsylvania creates a physical presence within the Commonwealth. This means that retailers who have inventory stored within Pennsylvania are required to register to collect and remit Pennsylvania sales tax on any sale made by the retailer directly to Pennsylvania customers. We are highlighting this one because many people who sell online are not aware of this. Even if you sell through a marketplace facilitator, the goods are stored in one of their warehouses, but the end customer isn't a Pennsylvania resident, you have a physical presence in the state. Speaking of online sales, this is the perfect way to transition into economic presence. Even though an entity might not have a physical presence in Pennsylvania, they may have what's called economic presence. The Tax Reform Code defines maintaining a place of business within this Commonwealth to include having any contact within this Commonwealth, which allows the Commonwealth to require a person to collect and remit under the Constitution of the United States. This statement is referring to economic presence. If a business makes $100,000 or more in annual Pennsylvania gross sales, then that business would be considered to have economic presence, and they must collect and remit Pennsylvania sales tax. In 2018, the Wayfair versus South Dakota decision opened up the legal door to expand the concept of nexus beyond mere physical presence. In the Wayfair decision, the Supreme Court ruled that as long as the state had a uniform tax rate, did not apply the new law retroactively, and provided some sort of administrative assistance in making tax determinations and filing, economic presence is an acceptable standard in making businesses collect sales tax. This effect is to level the playing field for all businesses. In short, what we are talking about here is out-of-state businesses that sell to Pennsylvania customers. Establishing consistency in the requirements to collect and remit sales tax. Previously, when nexus was determined solely by physical presence, these businesses would have a huge advantage over Pennsylvania brick and mortar locations, as they were not held responsible for the collection and remittance. With the new law, out-of-state businesses are now treated similarly to Pennsylvania business locations if they make over $100,000 in gross sales into Pennsylvania annually. I use the word nexus a lot here, so let's quickly discuss what that means. Nexus is when a business has either a physical presence or an economic presence in Pennsylvania. Sales tax nexus is just a fancy way of saying a significant presence in the state. If a business is considered to have nexus in Pennsylvania by having either a physical presence or an economic presence, then they must collect sales tax on all taxable sales to Pennsylvania customers. State sales tax is generally imposed by 44 other states. These states have similar concepts of physical and economic nexus as well. And the main difference between these states and what was just covered for Pennsylvania will come down to the thresholds of economic nexus. Some states have a dollar threshold similar to Pennsylvania, although the dollar threshold can vary. Some states have a number of transactions or dollar thresholds such as 200 transactions or $100,000. To round it out, some states have a number of transactions and dollar threshold such as 200 transactions and $500,000 to establish economic nexus. Unfortunately, we cannot provide information concerning the administration of the other states' taxes, but there are resources available online to help you determine if you might have a filing requirement in another state. The next area we will talk about is exemptions. Unlike exclusions, which are usual items never subject to sales tax, an exemption is situational and dependent on who purchased the item and how the item is used. Pennsylvania law allows businesses to claim an exemption for from sales tax for several different reasons. The exemptions are centered on the certain business processes, and their taxability depends on who bought the item and how it is used. To claim an exemption from sales tax, you must complete the REV 1220 and disclose a valid basis for the exemption. Keep in mind, the purchase must be consistent with the exemption reason being claimed. This form must be filled out to completion. You must select if the exemption is to be used for one or multiple transactions. Fill in the name and address of both the seller and purchaser and select the exemption being claimed. Additionally, the burden of proof falls on the shoulders of the person claiming the exemption. You must supply supporting documentation when appropriate to support your exemption claimed. If the form is missing any of this information or the purchaser's signature, the seller has a right to reject the exemption certificate and charge tax. as it would be considered incomplete. So let's go over some reasons you may claim an exemption for Pennsylvania. The first reason you may qualify for an exemption is if you're an exempt entity, such as a government organization or a qualified nonprofit. Items purchased by state and federal agencies, as well as Pennsylvania school districts, are exempt from sales tax in most cases. Catholic and private schools will receive a 76 number to claim an exemption. Regarding construction contracts, the exemption is limited to building machinery and equipment, not the governmental organization. For nonprofit organizations or institutes of purely public charities, there is a limited exemption on purchases. An example of institutions of purely public charities include not-for-profit hospitals, volunteer fire companies, and churches. These organizations qualify under this category are given a 75 sales tax number by the department. When we say limited exemptions, we mean that there are certain requirements that must be met to consider the purchase exempt. The items or services purchased by these entities must be directly used in their charitable purposes. For example, let's say a church purchases a lawnmower to use for maintenance of their property. They will need to pay sales tax on this purchase because the lawnmower is not directly used in their charitable purpose. Additionally, all exempt items must be purchased in the name of and from the funds of the exempt organization. Excuse me. Please note that if you have 501c3 status with the IRS, you do not automatically qualify for this exemption. And you must file an application, the REV 72 with the department, to determine your state exemption eligibility. If you are a business operating in a Keystone Opportunity Zone, a strategic improvement zone, or similarly designed state economic zone, you are given a sales tax exemption on goods and services used exclusively in the zone. Purchases made for items or services used by the business outside of those areas will need to include sales tax. Businesses qualifying for this exemption receive a 72 number from the Department of Community and Economic Development, or DCED. So next, you'll want to consider how the item is being used. If an item is being used directly and predominantly by the business in an exempt business process, it will qualify for an exemption as well. Exempt business processes include manufacturing, mining, dairying, farming, shipbuilding, and timbering. Direct and predominantly used means that the items is used directly in the exempt business process over 50% of the time. An example is a manufacturing entity purchases a forklift that is used in pre-production activities like moving raw materials and production activities like moving work in process from one workstation to another, and post-production activities like loading finishing goods onto a truck. For the forklift to be exempt from sales tax, it must be used over 50% of the time in production activities. If it is used more than 50% of the time in activities that are not considered a part of the actual manufacturing process, then there would be no exemption. And finally, if you are buying goods and services for resale, you can complete the REV 1220 to receive an exemption on the items upon your initial purchase, since you will be collecting the tax from your customer. Most of the time, this applies to retailers or wholesalers who purchase items for the sole purchase of resale. You are deemed a retailer or wholesaler, you will be issued an 8-digit number by the Department of Revenue. So for an example, I own a car repair shop, and I am working on a car for a customer that needs a new part. I order the part from a place like Napa or AutoZone. The part is then being resold to the owner of the car once it's installed. Since I am purchasing the part for the sole purpose of reselling to my customer, I would supply the REV 1220 to Napa or AutoZone, so I would not pay sales tax at the time of my purchase. Earlier, we talked about the tax paid purpose resold credit. That credit is claimed by those businesses who are buying items without the intent to resell and later end up doing so. Unless, of course, you are in the industry of specifically identifying in the law, such as barbers or beauticians. The difference between this and the PPR credit is that in this scenario, I am not using the part for use in my shop. Therefore, I should be not paying the tax up front, as I intend to collect it from my customer. A side note, barbers and beauticians are required to pay sales tax on all purchase of equipment, materials, or supplies, regardless whether the property is purchased for the use and performance of services or for resale. If you fall in this category, you must pay the sales tax and claim the tax paid purchase resold or TPPR credit on your sales tax return. Use tax. When a seller does not charge PA sales tax on a taxable item to a Pennsylvania purchaser for any reason other than a valid exemption, it would become the responsibility of the purchaser to pay the tax directly to the Commonwealth. This is called use tax. Use tax is the counterpart to sales tax, and these situations most likely occur when the seller has no nexus in our state. As we just stated, use tax is sales tax not collected by the vendor or seller at the time of purchase, and is then the responsibility of the consumer. Examples when use tax is due is if your business makes purchases of taxable items over the internet, through toll-free numbers, from mail order catalogs, and from out-of-state locations that are not charging PA sales tax. You, as a purchaser located in Pennsylvania, must essentially make a payment to cover the amount of sales tax that should have been included with your total at the time of purchase. This is the purpose of use tax. The tax rate is the same as sales tax, 6% state plus 1% local tax for items purchased in, delivered to, or used in Allegheny County, or 2% local tax in Philadelphia. Many businesses believe they save money by making tax-free purchases from out-of-state vendors, unaware that these transactions are often assessed upon audit by the department. Since assessments include interest and penalties on top of the tax, businesses in these situations have increased operational cost by not voluntarily addressing use tax obligations. So now that we know who needs to collect sales tax, let's discuss how to go about registering for a sales tax license. In order to collect sales tax, you must have a license issued by the Pennsylvania Department of Revenue. The license performs many functions, including demonstrating to the public that a business is duly licensed agent to collect sales tax on behalf of the Commonwealth. It should be noted that if a business has collected sales tax without a proper license, they should coordinate with the Commonwealth to remit the money immediately, which means 30 days within collecting it. To register and obtain a license, you need to complete the PA online business tax registration application. If you have no pre-existing business tax accounts, you can use the business registration hyperlink right from the MyPath homepage without logging into your profile. If you have any pre-existing business accounts and simply need to add a sales and use tax, you should log into your profile and use the business registration hyperlink. The reason for this is that by going through your logged in profile, you won't need to refill in your business information for the application. Please be aware that citations are issued for operating a business without a valid sales tax license. Under Pennsylvania law, sales tax monies collected by a business on behalf of the Commonwealth are defined as trust fund money. The money does not belong to the business, it belongs to the Commonwealth. It must be handled accordingly to the law and to the department regulations. A business must meet the timely reporting and filing requirements. Proper handling of trust fund money helps secure the success of the business by avoiding costly penalties. If you are an entirely new business to Pennsylvania, we recommend that you visit business.pa.gov for all your registration needs. This one-stop shop website was established to help new businesses get up and running beyond just setting up their tax accounts. Now that you've signed up for your sales tax license and are ready to make some sales, you will need to know how to collect and remit the tax to the department. Of course, the first step to collecting sales tax is knowing the amount that needs to be collected. As mentioned previously, sales tax is 6% of the total purchase price, including warranties, which represent prepaid taxable services to taxable tangible property. Delivery and other services. An example of another type of service that would be included in the purchase price would be the charge for car detailing, including with the purchase of an automobile. When it comes to deductions, the basic rule is any cost of a business occurs in selling a taxable good or service when passed on to the purchaser is considered to be a part of the taxable purchase. For example, if you take a look at your phone bill, may list a line item called universal service. This is a charge that telecommunication providers may add to your bill to recover their cost of federally mandated contributions to the universal fund. It is a cost of doing business for them, and they may elect whether to bill their customers for this. Amounts representing on-the-spot cash discounts, employee discounts, volume discounts, store discounts such as buy one, get one free, wholesalers or trade discounts, and store or manufacturer coupons shall establish a new purchase price if both the item and the coupon are described on the invoice or cash register tape. A recent court case, Meyer versus the Commonwealth, affected how general discounts are handled. The court found the regulation does not require the coupon related to the particular taxable item in order to reduce the purchase. Only the item and coupon be described on the receipt or invoice. As the court noted, if all items on the invoice or receipt are subject to tax, then it is reasonable to determine the coupon applies to the taxable items and the purchase price may be reduced. Conversely, when all items are not taxable and the coupon did not identify to a taxable item, the description is inadequate and the amount of the coupon cannot reduce the purchase price. To put it simply, in order to reduce the taxable purchase price, the receipt must identify what products the discount applies to, or all items on the receipt must be taxable. Sales tax returns and payments must be filed electronically. There are 3 methods in which you can do this: online, over the phone, or using a third-party vendor. We strongly encourage you to use our online MyPath portal to file and pay your sales tax amounts. Not only are you able to file and pay for the current year, but you are also able to view previous filed returns, access notices that might have been issued from both PATH and eTides. Request statement of accounts that are available immediately after you submit your request, as well as send messages to the department and more. Another very important function is that you can grant permission to others like your CPA or bookkeepers to also view information regarding your returns. You can access the MyPath portal at www.mypath.pa.us or simply visit the revenue.pa.gov and click on the icon that says MyPath right on the homepage. Please note you must create an account to utilize this service. The department has third-party vendors who will provide e-filing software for those taxpayers who do not wish to use the department's e-filing options. A list of approved software vendors is available at the department's website. Important things to remember. Number 1, the PA3 forms are not available for download from the internet, and use of other tax forms could result in non-filer notifications and or the application of tax payments. Per regulation, taxpayers who are making payments of $1,000 or more must remit them through electronic funds transfers, also known as EFT payments. Failure to comply with the electronic funds transfer remittance requirements may result in an assessment of a penalty equal to 3% of the total tax due, but not to exceed $500. The payment may be opposed on all payments of $1,000 or more that are not presented to the Department of Revenue by an approved payment method. So if every quarter you send a check for over $1,000, you are going to get hit with an EFT penalty every quarter. When you initially register for a sales tax license, your filing frequency will automatically be set at quarterly. Near the end of every year, the Department of Revenue reviews the average of the current year, first and second quarter sales, as well as the prior year third and fourth quarter sales, to determine if the filing frequency needs adjusted. So semi-annual filers, those who have an actual tax liability, if their actual tax liability is $300 or less annually. Semi-annual returns are due August 20th for the January to June period, and February 20th for the July through December period. Quarterly filers are those with actual tax liability is less than $600 per quarter, but greater than $300 annually. Quarterly returns are due the 20th day of the month following the end of each calendar quarter. So that would mean April, July, October, and January 20th would be the quarterly due dates. Monthly filers, whose actual tax liability is less than 25,000, but greater than 600 per quarter, monthly returns are due the 20th day of the month following the end of each calendar month. So this is a lot of information being thrown at you, but thankfully the department puts out a yearly due date calendar called the REV 819, which is broken down by the frequency to help you remember when filing due dates are. You can, of course, find this form on the Revenue's website. So if your actual tax liability is 25,000 or more per quarter, you may be required to remit what we call accelerated sales tax prepayments. These are basically advanced tax payments made for those who have a higher tax liability for the year. We will have more information available on accelerated sales tax prepayments in the future. But we have found that typically this is not something a new business needs to be concerned about right away. The Department of Revenue offers a vendor discount for timely filed returns and payments. This discount is limited to a flat rate depending on your filing frequency or 1% of the tax collected, whichever is the lesser of the two. So if you collect sales tax on an item that you previously paid sales tax on, you can claim a credit for the sales tax paid when you originally purchased the item. So for example, Ted owns an aluminum siding company, which makes half of its revenue in retail sales and the other half in contract work. He enters a construction contract to install 1,000 square foot of aluminum siding on a customer A's house. So Ted purchases the 1,000 square feet of aluminum siding at $3 per square foot. He correctly pays $180 sales tax on the $3,000 purchase price because he anticipates that he will be the ultimate consumer of the siding. Before the contract is performed, Ted decides to sell the aluminum siding at retail for $5 per square foot to customer B. At the time of the sale, he properly collects the $300 sales tax from the purchaser who bought the aluminum for $5,000. So in reporting this $300 sales tax, which he has collected from customer B, Ted is permitted to claim a credit of $180 for the sales tax which he had previously paid on the item. This is called a tax paid purchase resold credit, or TPPR credit. This credit shall be taken within 3 years of the original payment of sale of tax, on the item which has been sold. It is important to remember that this credit is not for those items that are purchased with the intent to resale. We will talk about exemption certificates in a little while, which will cover those scenarios. So businesses who are registered for sales tax may remit a tax as part of their sales tax return. If you're familiar with the return, this would go on line 6. Businesses with ongoing use tax liabilities who are not registered for a sales tax should apply to the department for a sales and use tax account through the MyPath system, which we discussed earlier. Businesses with infrequent use tax liabilities may use the department's online use tax payment option right from the MyPath homepage, which again is a non-logged in function. Individuals or sole practitioners should also use line 25 of their PA 40 to pay use tax. So let's recap some of the general rules that we just went over. Filing and remittance occurs at different intervals determined by the department. You can be either a monthly, quarterly, or semi-annual filer, depending on the size or sales volume of your business. First-time filers will always be set up as quarterly until the department has a chance to review their sales activity to determine if the frequency needs adjusted. The due dates will always be due the 20th of the month following the last day of the reporting period. Again, Form REV 819, which is available on our website, is there to help you remember when your due dates are based on your designated filing frequency. Local and state sales tax are filed together on one report. One thing that a lot of people are not aware of, but is very important, is that even if you have no sales for a certain period, you are still required to file a zero return. Think of it as an informational return, letting the department know that you had no sales for that period. You must do this in order to stay compliant with the department. No discount is granted on returns filed late. Penalty and interest will be added to the late filings as well as late payments. For interest, any late payment of tax interest is calculated on a daily basis. It is calculated by taking the amount of tax due, multiplying it by the number of days past the original due date, and then by the daily interest rate. The annual interest rates vary by year, so you will want to use the REV 1611 to find out more information regarding how this is calculated. Penalty, the penalty for past due filing of sales tax return is 5% per month from the due date until the date filed. But excuse me, but not to exceed 25%. If an underpayment penalty is warranted, it is imposed at the rate of 3% a month on the unpaid tax balance from the date filed to the date paid, not to exceed 18%. In no case shall the addition be less than $2. Please note, if proper tax, interest, and additions are not remitted, the department will make an assessment. Sales tax is one of the most, if not the most complicated tax for taxpayers to deal with. I know we've thrown a lot of information at you today, but on an already nuisance topic. So let's discuss some resources that you can refer to, which are available on our website. Majority of these will be the same resources that we had mentioned earlier, and we serve as reminders to what is available. We've mentioned this one a few times throughout the presentation. The REV 717, or the Retailer's Information Booklet, is a great guide to determine goods and services subject to sales tax. It also provides some information on how the other topics we discussed here today, as well as topics like petitions for assessments, construction contracts, motor vehicle lease tax rates, and more. Here we have the REV 588, starting a business in Pennsylvania. It's a guide to Pennsylvania taxes. This is a fantastic resource that touches on all the basics for new business owners. This guide includes information on sales tax, as well as regulation, registration, employer withholding tax, and other items that going into owning and operating a compliant Pennsylvania business. The REV 819, which we talked about when discussing due dates, is the schedule put out each year that breaks down filing and payment due dates by filing frequency. The REV 1611 is the form used to calculate the interest on all taxes due after January 1st, 1982. Earlier, we mentioned that interest is calculated on a daily basis. It is calculated by taking the amount of tax due, multiplying it by the number of days past the original due date, and then by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. The interest rates for any given year is established by the U.S. Treasury Secretary and is effective on January 1st of each year. We strongly encourage all of our customers to use our online customer service center. To do this, you can visit the URL listed on the screen or click the customer service icon directly from our homepage. Here you can find thousands of answers to frequently asked questions. These responses are updated regularly to ensure that the information you are receiving is accurate and relevant. If you are not able to find an answer to your question through the FAQs or just general website resources, you have an option to submit a question to the department. This feature allows users to submit general taxability questions or a more pointed question regarding a specific scenario to a trained representative who specializes in sales tax. We will review your submission and respond within 72 business hours in a process that's similar to receiving an email. And then last, we can't forget, but the Customer Experience Center, call center. Here you will be able to speak to a representative skilled in whichever particular tax type you pick from the menu prompts. Our regular business hours are Monday through Friday, 8 a.m. to 5 p.m. We do have a voluntary disclosure program. This provides an opportunity for businesses and individuals who have recently become aware of their Pennsylvania tax obligation to voluntarily come forward. In return for coming forward voluntarily filing their tax returns and clearing their tax debts, taxpayers are only responsible for the payment of tax and interest. Penalties for most taxes administered by the Department of Revenue will be waived when the requirements of the voluntary disclosure agreement have been completed. In addition, taxpayers are only responsible for satisfying their tax liabilities for up to 3 years plus the current year, unless sales tax was collected from a customer and not remitted. Unregistered taxpayers with the Department of Revenue who have collected business trust fund taxes but failed to remit those taxes may be eligible for the voluntary disclosure program. Taxpayers interested in the program should send an email to the email address on the screen, and then they would be able to, would be assigned to a person requesting this situation. All right. For our last slide here, I will turn it over to Don Bianchi, our Director of the Customer Experience Center.
Hello, everyone. I want to thank you for joining us today, and we very much appreciate the partnership that we have with the SBDC to bring these informational sessions to you. Today, I'm coming on board to talk with you about a limited time offer that the department is putting out there for new businesses. So the Department of Revenue has partnered with a company called Avalara to offer their DAVO application. And Avalara is a company that files sales tax returns and remits the sales tax collected for business taxpayers. Their service allows the business to focus on running their operation instead of dealing with the hassle of filing and remitting sales taxes. Now, as you've listened to Stephanie today, you understand that there's a lot involved in filing sales tax returns. So again, we're offering this limited time offer to those of you in attendance at this session to see if this is something that you would like to use or try. So during this opportunity, the department is going to pick up the costs of the DAVO service for 12 months. The DAVO service does have to plug into a point of sale system, but Avalara does support many of the popular point of sale systems, such as Square, Toast, Lightspeed, Table Needs, SkyTab, QuickBooks, Heartland, GoDaddy, and Parbrink. Now, again, you can check out their website to see if there's more information on this. But how it works is if you accept into this program, the department will have someone reach out from Avalara to you to talk with you about this. Avalara will install software on your point of sale systems. They will calculate the sales tax that is due based off of the sales that you've made. Avalara will collect the sales tax data daily from you, and they will sweep the bank account to take the tax that needs to be remitted to the Commonwealth daily as well. At the end of the month, Avalara will actually go back through with you and talk with you about the sales that you made to make sure that sales tax was calculated correctly. Then Avalara will actually file and remit your sales tax return for you to the department. So after the 12 months free offer, you have a choice of, hey, do you want to keep with it or do you not? And actually you can sign out of it anytime you want or cancel the service. But after the 12 months, you would have to continue to pay for the service on your own. And I believe right now that is a cost of approximately $55 a month, which may or may not be an economic advantage to you, depending on if you're doing your own sales tax filings or if you're having someone do it. So if you are interested in this program, I'm going to put information for contact in the chat. So you can have Rebecca Kohler is our person heading up this program. This is her direct phone number and her email address. If any of you are interested, please reach out to Miss Kohler and she will help get someone from Avalara in contact with you. She'll explain some of the other key points that may be a little bit more detailed than what I went in here today. Please remember that this is a limited time offer. So we only have so many slots that are available to work through this program with Avalara as part of this pilot project. So if you are interested, reach out as soon as possible. If you want to see more about the DAVO software offered by Avalara, go to www.davosalestax.com. Now, Avalara is a private company. They will gladly sign you up. If you want to take advantage of the free 12 months partnering with the Pennsylvania Department of Revenue, you must contact Ms. Kohler and have us make a reference over to Avalara for the service. Otherwise, Avalara will just start charging you if you sign up with them directly. So we will also provide this information to Cindy to send out to you guys who have attended today. If anybody has any questions, please type something into the Q&As and we'll try to answer it for you. And if not, I thank you very much for your time today. And I wish all of you success in your businesses.
Thanks, Don. And thank you, Stephanie, and to your team here. I know that you guys have been busy answering questions. We have a few more. And so I'm just going to hold on 1 second and allow those questions to be answered. I'm going to throw out a poll question. If you could just take 1 moment to answer the question, that would be fabulous. As a reminder, and I know I've said this a little bit, a couple of you guys have asked about it, but we will, once the recording has been completed and processed, we'll send it out. If not before the end of today, it'll be sent out tomorrow. Secondly, we will be sending out the slide presentations. So what you have seen, you will get in your email. You'll get our tax series flyer. And then, of course, we will be sending the information out that Don just mentioned about the service that's available for a limited time through them. And I know that's in the chat as well. So, or information of connecting with the Department of Revenue to sign up for that limited time offer is in the chat. Awesome. Well, I know it's a lot of information, and I know that this is a topic that we get a lot of questions on as well in our day-to-day. And so I do appreciate you taking the time. I'm going to end the poll. And I don't want to end, let's see, is there a list of accountants through the SBDC that you can recommend? So Cody, the Small Business Development Center, we are able to provide a short list of accountants. We can't specifically send you to one in particular. And so I would encourage you to reach out to your SBDC that is in your neighborhood. And then a transcript. Christine, yes. We also produce a transcript, and I will make an effort to send that out as well as the recording. So with that, we're after 1. So a lot of information in a short amount of time. And I appreciate everyone being with us today. And we look forward to having you join us next month, April 12th, for withholding basics. And yes, to DJ, we will try to pull together all of the questions as well to send those out. So thank you, everyone. You have a great day. We'll see you next month.